Good day and thank you for joining me. My name is Nasser Carstens. I'll be taking you through the Sirius real estate investment idea. Starting off with the executive summary, in terms of segmental exposure, Sirius has traditionally been a highly specialized industrial REIT, exclusively investing in German business parks, production facilities and warehouses. The balance sheet has proven to be resilient and is well positioned with strong cash flows supporting growth opportunities. Valuation indicates that the counter is significantly overvalued. Therefore, we are underweight on the counter. This graph shows the low correlations between Sirius and the broader South African property market due to the highly specialized nature of its portfolio and exposure to Germany. In terms of segmental exposure, Sirius is heavily concentrated in Germany, however it is well diversified within the country. Although Sirius does have freestanding traditional office buildings, most of the office exposure forms part of its industrial business parks, which has provided higher relative occupancy rates. Management remains conservative in their approach, focusing on their segmental strengths, which has allowed for consistent, robust growth. Investments in subsidiaries have also been in the same segments and geographical areas. Sirius has exceptionally low cash reserves. However, this is underpinned by vast unencumbered assets, which allow for favorable financing options, as well as strong cash flows, and boasts an interest coverage ratio of 6.8 times and a loan-to-value ratio of 31%. Sirius has been well positioned to take advantage of structural shifts to warehousing and logistics properties, as well as the relatively sheltered German economy, which enjoyed protection within the Eurozone from impacts of the pandemic. Large industrial tenants also performed well during the pandemic, which provided a degree of certainty and security in terms of rental negotiations and escalations. Office properties were a slight concern, however demand remained steady. Then moving on to valuation. The sum of the parts analysis indicates that the counter is trading at a 7.1% premium to the sum of its parts. The counter is trading at a 14% premium to its intrinsic value, and cap rates indicate that overvaluation relative to historical averages will likely result in a downward valuation, which will then in turn put pressure on the share price. In terms of price to book, the counter is trading at an all-time high of 1.63 times, as illustrated in the below graph. Sirius therefore represents a fast-growing and well-managed business. However, it is currently trading at prohibitive prices in terms of valuation, which underscores our underweight recommendation. This graph indicates the historic and projected cap rates and shows overvaluation of their properties, which are likely to experience impairments. The current cap rate of 6.5% is 86 basis points below its historical average cap rate of 7.4%. Applying the historical cap rate of 7.4% implies that properties are overvalued by 7%. We should see valuations reflecting this at some point in the short to medium term. If you would like to place a trade, please speak to your financial advisor or contact our trading desk. Thank you for listening, and please take a moment to read our disclaimer.